Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't need to, and today we are talking about SoFi Technologies and their SOFI stock price. In this video, we will be analyzing 3 articles, to where the first one is titled, SoFi Earnings Sent the Stock Flying, Why Shares Still Got a Downgrade. So we're going to be talking about this pullback that is happening with SoFi shares right now, and why so many analysts have downgraded the company's overall future rating. But that's not all. It's not like just a few analysts have done this, but rather a plethora of analysts across the board, where we will be looking at 3 to 4 analysts who have literally done this. And then at the end of the video, we're going to be discussing whether or not SoFi Technologies is still a good buying opportunity despite all of these downgrades. We're also going to be going over the latest price targets, news catalysts, and where I see this company going forward, and if I plan to buy, sell, or hold this company. So for more videos just like this one, don't forget to go and annihilate that like button right now, comment your thoughts down below, subscribe if you are new, don't forget to become a member of this channel for as little as 99 cents per month, but don't worry, if you can't afford 99 cents per month, by subscribing, you're going to get this content for absolutely free. And with that being said, I say let's dive right into today's stories. SoFi Technologies is a fintech company, or a financial technology company that essentially operates as a digital bank. Recently, their share price surged by around 20% after delivering fantastic earnings. They brought in very strong deposit numbers, narrower than expected losses for the second quarter, and very good future projections regarding financial results. But Wall Street is looking even further ahead, to where they want to see this company become profitable, and lucky enough, SoFi Technologies is anticipated to become profitable during the fourth quarter. Right now, SoFi shares, after falling by almost 10%, trade for $10.35, while very bearish analysts believe this company is worth only $3. Well, let's look at the numbers. Recently, an analyst downgraded the company to an underperform rating from his original market perform rating. However, I do want to say that he raised his price target to where he increased his price prediction from $5.50 up to $7.50. And his reasoning behind this downgrade for their overall rating, but an increase for their overall price target, is that he says the valuation has overshot the fundamental earnings outlook. And honestly, that is a very good piece of criticism that is completely true. You don't want the company's share price to be disconnected from the company's fundamentals, because a share price should be based off of the fundamentals, and as soon as these things disconnect, we can anticipate a pullback for the share price, which it looks like is starting right now, considering shares have already pulled back close to 10%. But he goes even further than that, saying that even when this company achieves profitability, their profitability is going to be modest at best in 2024. So he's really not excited about this company becoming profitable. On top of that, we also have another analyst from Wedbush who struck a similar note, saying that the company is going to underperform peers and the general market, which is why he gave them an underperform rating with the most bearish price target of $3. Now, let me take a step back. It is very unrealistic to think that SoFi Technologies is going to fall all the way down to $3. Now, if it does fall to $3, I say that's great news. I would pick up shares all the time, every day. But based upon their current earnings report that they just had, there's no way that fundamentally the company is worth $3 in my opinion. So off the bat, we can completely discount that very low price target for the company. But likewise, this also is applicable to higher price targets that are above $14 in my opinion, because I think $14 should be the highest price target for this company, not necessarily $16, because anything above $14 in my opinion makes the company become disconnected from their overall future financial projections. However, overall, I personally am still bullish on the company, unlike the majority of analysts that we are going to be talking about today. If you're not familiar with SoFi's overall business model, they have a flywheel business model, and they are divided into 3 main revenue segments, which would be their financial services segment, their lending segment, and their technology platform segment. But all eyes seem to be on their lending segment because this is their largest segment. And their CEO even said that profitability is going to come directly from their lending segment, to where he says that building out all these non-lending products, you have to go out and acquire customers. The payback payback period is 12 to 24 months. That business now is almost profitable. So he's essentially saying that non-lending products take a long time to actually start to ramp up, but now we are going to start seeing the fruits of the labors of the financial services and the technology platform segment on top of the booming success from their lending segment, which all are going to work together. But despite the confidence from the CEO, analysts seem to be sticking to the sidelines for SoFi Technologies, with 45% of them rating this company as a neutral rating, 35% saying to buy the company, and 20% saying to sell the company, which is absolutely ridiculous. Why would you sell SoFi Technologies? They are growing very rapidly at over a 30% compounding annual growth rate. But for some reason, analysts are still hitting the table saying that this company is going to fall further in price. Now, don't get me wrong, I still believe this company is going to pull back, and we're already seeing them pull back right now, except I don't think they're going to drop down to $2 to $3. That's absolutely ridiculous. I think they're going to temporarily fall in their share price because stocks don't always just go up, and then at these valleys where the share price falls temporarily before going back up, that is when we would buy the company. We also recently saw a KWB analyst downgrading shares of SoFi stock from, again, a market perform rating down to an underperform rating. But despite the downgrade, another analyst has increased their price target for SoFi stock from $2 up to $7.50, which is a huge upgrade. Again, I never agreed with the $2 price target or the $3 price target. That's absolutely insane. However, the bad news is that even if these price targets are correct, it still represents potential downside of around 30% for the stock price, even though the average price prediction is around $8.20, which I believe the company could fall between $8 to $10 before it starts to appreciate in price again. This analyst even commented by saying that we believe valuation has overshot the fundamental earnings outlook. Overall, we believe investors face a unique set of risks this early on in such a high growth story, and see the upside/downside as negatively biased after recent outperformance in second quarter 2023. So again, we hear that same adage that the fundamental earnings outlook did not actually anchor them to their valuation, meaning that their fundamentals have been disconnected from their market capitalization, which is their overall valuation. And again, I would agree with them on that point, except I don't agree that their true valuation is between $2 to $3. Again, that's absolutely absurd of them to say that. But there is a glimmer of hope because Bank of America has said that SoFi Technologies is going to perform well. An analyst from Bank of America Securities expressed a neutral rating or a market perform rating for SoFi Technologies with an adjusted price target, which was originally $10 upgraded to $11, and that's exactly what we want to see as investors. Because let's take a look at the financial health of this overall company. The company is healthy overall. Their debt to equity ratio is strong. Their price to book ratio is good, their DCF or discounted cash flow is good, and the return on equity or ROE is also decent. However, on the other hand, their price to earnings ratio is not advantageous for this company, but hopefully when the company actually becomes profitable, that this will start to become more realistic. But overall, it seems that they are fundamentally healthy. So it doesn't really make a lot of sense for these analysts to say that the company is going to underperform the overall market. The author of this article goes on to say that the company's strong financial performance and positive growth outlook indicates that it is well positioned within the finance industry to do well over the long term. And that's exactly what I look for being a long-term investor. So investors and analysts will be closely monitoring their next earnings report to see if their financials could actually get them to profitability. And of course, I think the company is going to become profitable in the fourth quarter, not the third quarter. But some other investors and analysts believe this company could achieve profitability as early as quarter 3, but we're just gonna have to wait and find out. Overall, I would love to hear your thoughts and your price targets for SoFi stock. Don't forget to go and annihilate that like button, comment your thoughts down below, subscribe if you are new, and I will see you in the next YT video.